Let's welcome on board Sunita Reddy, MD at Apollo Hospitals, and talk about how their numbers have been. The stock, of course, is on a tear this morning. Sunita, great to have you on the show. Tell us about the growth outlook for the healthcare segment. Is mobility for patients has now picked up after 2 years of COVID?
I think we've shown a strong growth of 9%, and this seasonality was probably against us. This was a combination of holidays from Deepavali and Christmas. Otherwise, our occupancy definitely would have been higher. So I think we look forward to far better performance in the fourth quarter.
Your margins are flattish year on year and sequentially down for the quarter. How will the margin trajectory look, say, over the next 3 to 4 years?
Yes. So if you look at our margins, I think we have year on year, we've shown an improvement. And it is, we are improving margins significantly. Quarter on quarter, it is slightly down. But this, like I said, is seasonality and occupancy had come down. So we're currently at 65% occupancy. And we're moving in that trajectory of 70%. When we are at 70%, I think the EBITDA margins will flow through. Currently, we're expecting to see about 25% EBITDA margin. Mature hospitals are already at 27% EBITDA margin. And this will come from three levers. The first, of course, is case mix, which we are highly focused at. Our ARPOB has also grown by 9% to 51,400 rupees from this case mix lever and some amount of tariff increase. The second is cost reduction, which I said over the next 18 months, you will see 100 basis points improvement coming from cost reduction. And the third is, finally travel has opened out. And with international patients taking a larger share of total revenues, we should see some premium patients coming in at better margins. So currently, international patients are 5% of revenue. This moving to 9% will have a significant impact on our bottom line and our margins.
Okay. So how's the Apollo 24/7 platform ramping up? What are the current monthly revenue run rate and guidance for growth in 23?
Yes, so for this quarter, it was at 543 crores, the GMV of it. It grew quarter on quarter by 83%. So clearly, there is a significant ramp up happening in this space. And I think that, we will close the year as we expected with 1,500 crores of GMV.
So company is undergoing a reduction in pledge shares also. Will this trend continue in FY24?
Yes, you will. Most certainly will. I can't guarantee you a timeline, but the intent and it is work in progress.
Right, and we're seeing consolidation as well taking place across the entire hospital sector. Are you looking for any acquisitions in the current scenario?
We're always looking for good acquisitions. So whenever there's an opportunity, be assured that Apollo will be looking at the right price, right geography.
Ms. Reddy, finally, what's the funding plan for these acquisitions?
So we already have 1,330 crores of current assets and money in mutual funds. So this will help us. Also, if you look at our debt to equity, it's at 0.34. So we have the opportunity to raise debt if required, but I don't think we will need to do so. I think we have a very healthy balance sheet on which we could make significant acquisitions.
Right, Ms. Reddy, great to have you on the show. Thank you so much for taking the time out and joining in today. That's the view coming in from Apollo Hospitals and the visibility that they have on the earnings going forward. Stock holding up 2% as we speak.